All right, here we go. Fourth time's a charm. All right, everybody. This is the first video that's going to be on the Discord explaining the confluences that we use, but we're taking it step by step. This is going to be the first confluence that we use, okay? This is our daily box, the FMOA box. All right. So what you'll do to get this kind of box is you'll come over to this little fun bar of trinkets, okay? So you'll click this geometric shapes little arrow that'll bring out this, okay? And what we use is the rectangle. So in how to get it set up with this little line in the middle, oh, excuse me, you'll hit this little settings button, go to style, and then this is where you'll select middle line. Make sure you have a middle line. You don't really need a background if you want. It's personal preference, and then you could set it to whatever color, suits your needs, whatever you're feeling, whether it's poop brown or piss yellow, who cares? It's your box, all right? Be proud of it. So normally I wake up around 8:30, 9 o'clock. I'm normally always on the charts by 9:15, okay? I'll just take a look at what happened the night before, see where the markets are at, really. But it's always on the 5-minute chart where we start off. So we'll go from this 5-minute chart, all right? And then once 9:30 hits, this is when all the volume and volatility is coming in for New York session, okay? That's the session that I only like to trade. I like blowing accounts on Asia session, but don't worry too much about that. So you'll take this box and you'll mark out the high and the low of the box, all right? The reason why we have the line is for entry, and the reason we use the 9:30, like I said, volatility and volume, all right? So if price, okay, I'll do a little drawing for you guys. If price on the 1-minute chart is down here, and then it consolidates, comes up. We have a candle break and close above this box. We'll be looking for longs. All right? Very simple. This is probably the simplest way to pass accounts and actually make money in the markets. Okay? And then if price, comes up here a little bit and then comes down and closes to the bottom of the box, we'll be doing the opposite. We'll be looking for shorts, okay? So we'll let this day play out. We have our box, and then we'll just see what price is doing, okay? Now, wicks do not count. Do not think since this wick broke out of the bottom of the box, we're looking for shorts. No, we need a full candle confirmation breaking outside of the box. So we have that right here. Perfect example. Broke outside of the box. So what does this tell me? Okay, we're looking for shorts. And where do we want to enter on these shorts? Anywhere in this area. Or say price, runs all the way down here for a couple of minutes, okay? And then comes back up with a lot of buying pressure. I'll maybe look to enter at the top of the box, all right? But for the first initial move, we're always looking for the middle of the box. Maybe if there's a lot of selling pressure, anywhere down here is fine, but just make sure you're very certain that there's a lot more pressure than another. And then that'll be shown with our other confluence that I'll get into in another video, okay? So we're looking for shorts here, okay? So, boom, price comes up, it's coming up, okay. We're getting close to the midpoint. Now, right here, this candle would have, went up, and then slowly shrunk back down to here. So that means there's a lot of sell pressure that's keeping price from going anywhere up here, okay? So if anything comes up into here, you still want to wait, all right? But another thing that we look for in times like this is I'll take this little vertical line array, all right? This is like half a Confluence. I'm not going to make a full video for this. It'll just be right here, explain very briefly. But say, price is really running. It's running. It didn't come back up into here, but it's running. Okay. This time frame, the 945 to 950, is when price tends to break that trend, come up here. If there's a lot of seller volume, you won't really get your entry up into here, but instead you'll get it somewhere down here. But you just have to be fairly certain that there's a lot of sell pressure. All right. So this 945 to 950 time frame is normally when I enter my trades, but that's just what I've noticed works best with this model. Okay. So we'll go. Okay. Bang, 945. We get this huge blue candle. Okay. And yes, you're probably thinking, wow, it broke into that area I was talking about earlier, but the candle barely closed above the midpoint. So what that tells me is that there's still a lot of sell pressure and we're not going to really go too much higher. If anything, we might get a candle up into here, but that's just a little bit of drawdown. Okay, so if I was live trading this, I would enter here, all right, for a sell order. So this leads me on to part number 2, okay? I like to chase 2-to-1 ratios with this model, all right? That's what I found works best for me. If you guys, want to go even more, it all depends on the day, how much volume is really in the markets, okay? So a day like this, there's not that much volume. That's why up here, it's saying I'm only losing 200, and then down here, I'm only making 400. So that's going to be, your basic 2-to-1 ratio. That's the best example. You're risking 200 to make 400. All right. Now let's watch this play out and just see how this goes. Boom, we get a fat candle. Okay. You would have had a little bit of drawdown right here. Price would have, went up a little bit, went up, and then boom, BBC downwards. Okay. And then bang, the next candle stops us out. It's that simple. It's not that simple, but it's a lot simpler than, some like ICT. Support and resistance is essentially what this is. This is a support, this is resistance, and yeah, so on and so forth. But guys, I just want to make this very, very important. This is really only telling you what the initial play is going to do. And I like spending as little time as possible on the markets. So with that being in mind, if I were to hit on this $400 trade, I would be off. Or we could even go a step further. If I really, really was very confident on this trade, okay, which I mean, this is almost picture perfect for our model. And I noticed that there was not that much volume, okay, I personally would do 2 contracts just to bump it up a little bit, and I would be risking 400 to 800. But whenever you're starting off, just use 1 contract. Do not try to go all crazy making thousands of dollars in a couple of days, okay? You can, but small wins add up over time, all right? And that is essentially the first video of many just explaining our day-to-day model, all right? And you would have caught this clean move. You would have been in your trade for 3 minutes, 2 minutes actually, and you'd be done for the day and off. So guys, if you have any questions whatsoever, drop them in the questions channel. and I'll be able to answer them, or maybe somebody else in the server will be able to answer them. And yeah, that's it for this first Confluence.